So now I know a lot of you guys don't have Michael Burry as a follow for you on the Substack and can't read the whole letter. I have the letter here. I hope you guys like it. This is Foundation's The Big Short Squeeze. I won't read all the nonsense, because he's very eloquent with his words, but in distinguishing, I know this stacked in Scion's conference room are S&P 500 stock guides for every month going back to 1968, and I guarantee you have not heard the vast majority of the companies in those guides. That doesn't really matter to me. The rest of it doesn't matter. Gemini 3 Pro, he's talking about a bunch of nothing here. But right here, if one is rather young and has 50 to 70 years, then one absolutely should almost entirely invest in common stock indices, preferably the S&P 500 and the NASDAQ 100 or both. Live life, touch grass, achieve real things, automatically reinvest dividends, and let the compounding of the index gods do the work. Maybe not this very day, but over time, this is the way for most. Of course, for some of us, just do not want easy. Of course, some of us just do not want easy. For them, well, their God gave them GameStop. That's right, guys. GameStop. It's not easy. It's a different way of life, is what he's saying. And I never do easy, and I am 54 years old, so that God has given me many more of GameStop's kind. And so he starts listing them all, tailored brands, not so well. When he's listing things, I wonder if he's familiar with connect the dots, the fact that private equity gets into these companies and then, got some dry, and that's the plan. So that's why GameStop's such a winner. So he goes on to give you all these ideas of other companies, and he says, I learned had best-in-class products, Apollo, Astro, Milky Way, database. Yeah, I don't even care about any of that stuff. I only care about the GameStop stuff. So, and then he talks about how he wrote to people regarding the $100 million in free cash flow. He says the creep factor is off the charts. I think half that if I had pushed Avanti, I believe that's the name of it, too hard, I end up being terrorized by Chinese mafia. Who knows? But Warren Buffett and Benjamin Graham had their cigar butts. So now you know what rhythm with butts means. Okay, cool. The Michael Lewis, who's the bestseller author, you guys know that. His wife is Tabitha Thorne, whatever. I don't care about any of this stuff right here. Honestly, if it's not about GameStop, I don't care. So he wrote all this, talked about a bunch of nothing. Back to GameStop. Thank God. Okay. 2018, I was running through my list. I spot GameStop, do some preliminary work, and the excitement out loud for my wife to hear, Eureka, I have found another village. Is that slut or shit? I don't know. I started dabbling in the stock during the summer of 2018, and I noted GameStop's call options were very, very active. This type of thing would play a huge role later. And let's see. And actually, no, I did not say that to my wife. We thought so. Most of October calls spiked in the volume recently. Okay, I don't even care about any of that. He's just talking about the past. Got you. As an investor, my thinking on GameStop was that it should have gone away a long time ago, but it had not. I want to know why. PC gaming had been a major threat for many years, but the console cycle still was very strong. The prior console cycle had peaked in 2014 in the time frame, and the next console cycle was delayed in 2020. My only analyst, Joe, noted GameStop was in trouble back in 2014, but we had not shorted it. Cool. A note about Joe. I hired Joe. Okay, I don't care about Lehigh. I don't care about any of that. Now I'm back. Regarding GameStop, Joe was still skeptic in 2018 as he continued chemo, battling recurring cancer. That sucks. But I was now locking in on it. 2018, I was looking for a console refresh. 2020 to boost the stock. I was early. I knew, but I usually am. And I thought I saw a number of catalysts. The stock seemed undervalued to me. I had a slug of cash and a decent cash flows for being so late in the cycle. Summer 2018, there was a lot of talk from brokerage houses about GameStop potentially going private and a leverage LBO as a possible catalyst. We know that there were Apollo was making proposals for GameStop, but we talked about that, how private equity was trying to leverage them out. The company was also looking to sell off its Spring Mobile, a chain of 1,200 AT&T stores, for a decent amount of cash, and I saw that as a potential catalyst as well. The company had roughly $304 to $400 million in owner's earnings, which each given year, prior to the past 4 years, $800 million cash, and about $1.3 billion market cap. It actually screened well and was still cheap, and that was a warning sign in today's world. Okay, so think about it. They had $1.3 billion market cap and $800 million cash, and they earned $400 million. So that kind of tells you they were earning their market cap between cash and earnings in 1 year. To give you an example, right now their cash is around $9 billion, and they earn $500 million, so they're at 9.5. What's their market cap? 9.5. It's rhyme and reason is the same right now. Many years later, you see the income had sagged in calendar year 2017, and about weakness to the price. And I hypothesized it was a typical late console cycle. Yeah, I guess not. Well, I guess it wasn't. It's significant cash flow, and the cash from the sale of Spring, which could play into a very big and consequential buyback, another possible catalyst. Still, I was not very convinced in this thesis. I kept the position small. Got it. Inventories were building in a bad way. They did sell off Spring Wireless for $700 million cash and a giant accounting loss later that year. And with the sell, I told you, cash jumped to 1.6, about the level of the market cap size. So flush again. Yeah, we talked about this in the past. So I knew they went in. They wrote a proxy letter. They got them to buy back their shares. And that's what all this tells you. A lot of this is just about the history of it. I want to talk about what's coming up right now, and we will, because this is just him buying in 2019. If you want to read it all, pause the video and go back to it. It's not a big deal to me. So, got all that. Cool. Right here, Dr. Michael Burry, GameStop Real Estate and the Airplane. They do disclose the plane. They got rid of it and they sold it. I believe these amounts were often overlooked. Yeah, it came down in price. Okay, we saw this part already. I don't know why he wants to go all the way back, man. This is why your post takes so long, Dr. Michael Burry. You're talking about stuff that everybody already knows. Okay, here we go. The letter stimulated many emails from GameStop shareholders, most of which I ignored. Of course you did. I did not want to form a group under the SEC rules. Wait a minute, Team 51. If I and even one other shareholder combined for over 5% of the shares, and we did not file a Schedule 13, we would be subject to SEC enforcement actions. So when Keith Gill emailed me, he was just another GameStop shareholder to avoid. I ignored it like many others. I cannot regret it because I was in that mode. I did not know who he was or Keith Gill had emailed me until the SEC investigation letter in 2021. Wow, so they came and did their homework on GameStop. I wonder why. Dr. Mark Burry and team, thank you for writing an open letter to the GameStop board. As a deep value investor, I share your views wholeheartedly, especially with regard to the board's inaction. Yeah, got you there. I am a CFA holder and last 10 owner. We know that part. Yet these past few months, I find myself, got it. It seemed these times where my value, first mentality manifests most clearly. We've read all this before. A month later, beknownst to me, Keith Gill launched it as Roaring Kitty on YouTube and began posting GME thesis and talking it up in August. I engaged with the company after the first letter, but it was superficial and did not get the sense that I would get the action I wanted. I agreed a short interview with Tay Kim and Marantz. Cool. Big short investor Michael Burry is now going long on GameStop back in 2019. Got that part. We knew that. He sold before it all went down. We knew about shrinking the board. That's all about. He thought he was kicking off private equity. Private equity actually came in at that point. Was buying back stock, and they were doing it through Merrill Lynch. Okay, we don't care about that part. Ryan and Chewy. Okay, right here. For example, my 3.1 million shares were 5% of the outstanding based rally total, but I still officially under 5% of the SEC rule. GameStop arranged for its executives to fly to California to meet with me. Before that happened, I was contacted by Ryan Cohen in early October 2019. Hope this message finds you well. Ryan and I talked for about 2 hours. mostly not about GameStop at all, since neither of us wanted to form a group under the SEC rules. I enjoyed the talk, which went in many directions. I liked Ryan a lot. Ryan struck me as a deep value investor. He explained he takes very big positions and waits. The Wells Fargo investment at the time seemed like it would be a long wait due to the asset cap, and he did not care. I love this, guys. I just start laughing. This is partly the freedom of not running money for others. Personally, I hold stocks a lot longer than I do when running a hedge fund. It's just the nature of the beast. Many other managers are the same way. But Ryan struck me as a more patient than most. Ryan seemed young. I believe he possibly had the temperament to be the next Warren Buffett, but I did not get to know him that well. We did not talk again. I was surprised when he took the stake and position he did. I met with GameStop management October 21st, and I discovered that both Sherman and Jim Bell were veterans. Otherwise, the meeting did not achieve much. I liked them as people. Sure, we did. Keep going on. Don't care about that. There was no short squeeze, and the very high volume continued throughout the 2020. Average volume was about 15 million shares a day, a little less than 25% of the outstanding shares. In today's terms, that would be 60 million shares a day. The short interest on GameStop trended up in 2019 and remained very high level throughout 2020. In March of 2020, GameStop announced some board changes that followed my recommendations. Not necessarily a good thing, like I already told you guys. But we know that part. It was interesting, though, as JK, look at this, JK Schmack, the CEO of PetSmart at the time, joined the board, as well as former Nintendo president. I told you guys about this, JK. But JK was interesting because a potential connection between JK and Ryan Cohen, but there wasn't. PetSmart had bought Chewy, 2014. Ryan ran Chewy, and JK arrived as CEO in June of 2018, so right after he left. I was minorly thrilled. Board delegate. Yeah, see, I never spoke to Ryan about the JK offer. I don't think JK is Ryan's pick. I think JK's a plant for private equity because I've seen all the other companies he's gone to, and they've been ruined, as in destroyed. Bath and Body Works, and he's at another one right now. Jewelry. He's at Signet Jewelers. So yeah, no, absolutely not. I continue to hold my positions. GameStop attention shifted to strengthening the balance sheet and reducing debt and cash flows. I agreed with that. There was a little dust up with the board, Sion, and other activist investors during the summer of 2021, but not relevant here. On August 28th, Ryan Cohen firm's RC Ventures filed 13D with the SEC. At that time of the filing, there were 65 million shares outstanding. Ryan owned 5.8 million of them. I controlled 3 million. Oh, cool. You should have stuck with it, huh? Isn't that what you said? It was just below the filing threshold on purpose. I had already made my splash a year earlier and no real impact on the price. I did not want to go over 5%. I also traded a portion of my position around, something I do when the stocks are drum rolling. Got it. Ryan was well above the threshold with the purpose to do for. Ryan was free to influence management. Cool. Oh, because you weren't part of it. Got it. IPO'd a little over a year earlier. GME shares jumped 20%. Yeah, all this is all old. I don't even care about this. Tell me something I don't know. Ryan was 35. The average age of a millennial retail trader was, you guessed it, 35. So was I. I don't even know how old I was at that time. 2020, how old was I? That was 6 years ago. I was like 37. Something like that. So a little older, but got it. All right, don't care about any of this stuff. He's still talking about the bullshit, the old stuff. We know about the letter from Ryan Cohen. Even Ryan suggests blah, blah, blah. Coming to the end, I had carried my full GameStop position, 3 million plus, minus 16 months. Most of that time, I lent out my shares at very good rates, highly double digits, which is lucrative on the big part of the trade. I did not believe I would ever earn so much simply by being short a stock. Of course, far less than if. Wow. I do not believe I have ever earned so much simply being short a stock. Of course, far less than if. Wow. So this is what was happening. The chart below represents Sion's time holding GameStop as a top long position in the fund. My average cost on the shares are $3, equivalent of 83 cents today. Okay. as a percentage of the flow has exited was about 128% short. Wow. I could have analyzed the situation better. I knew GameStop inside and out, and I thought I understood the volume. Okay, short interest and other dynamics. However, I was blinded by what I saw as execution risk. Well, maybe you should watch Connect the Dots and then you'd learn. As well as I Am Human. I had seen buyback shrink shares by a third and 100% of the short interest. Yeah, the reorganization of the board of directors and the selling of Spring Wireless for cash and the amount more than half of the market cap. All were home run slam dunk activist successes with concrete results, but zero impact on the price of the short interest. We told you the narrative of GameStop was just that bad. Yeah, they were left out to dry. They were sent out to die. I figured what had already been wrought would more concrete than a vague technical forward. More gotcha. So I used Ryan's unveiling as an opportunity to close out. Huh. I had no idea what was coming, and I had no idea that Roy and Kitty existed. So I did not think more about it. During the fourth quarter of 2020, I had other worries. We had dropped a very large separate account due to management change on their end. The account was over 25% of our assets and required sales across portfolio as we approached year's end. I love it that he didn't have leverage to hold that GameStop position. We basically doubled their money, but no new money was coming in. So it did not market. Cool. Congratulations on an excellent year. You always thrive in the chaos, and 2020 wasn't anything short of that. And then here you go. They're telling you the estimates and what you're up and what you did. The withdrawals came in forms as well. They needed cash to pay taxes on the gains. So I was in selling mode across the platform November, December, and January, and therefore on the sidelines when it happened. About 50 or so days after Sion got out of GameStop, that crappy business that I didn't mean to, that I thought was just GameStop was a belle of the ball. The entire world could not take their eyes off of it. And neither could I. Wow. He sold his whole position for nothing. And it went crazy. I wonder how that feels. Yeah, anyway. It says Gamma Squeeze. Got that part. Retail traders, Delta Neutral. Gamma increase. Yeah, I really don't care about any of this, but you guys could read it if you pause it. I'm sure it's big enough on the screen. If it's not, zoom in. I don't know. It's just a lot of words about nothing. However, saw a few thousand do it, maybe a collective. They find the sweet spot, distributed coordination, where it works like a corner in the default legal simply because enforcement is impossible. Yeah, we know that part. Naked short sellers, going back 20 years, and naked short sellers entered my field vision when I was long overstock and took an activist stake. His name rhymes with Kiotis. He's Mark Kiotis. I had nothing to do with, and I was actually sued by a short seller for being long the stock. Oh, that sucks. I believe most of the 140% short position GameStop was not naked short selling, but rather simple legal layering of trades. When a stock is borrowed from the owner and shorted to a buyer, who then in turn lends those shares out for shorting, a cycle is created and repeated. And if demand for shortening is high, this cycle will become a fairly elegant and long sequence. That's everything. GameStop was unprecedented, though. All that layering and all those synthetics that had to be unwound with urgency at the same exact time. The beautiful sequencing breakdown. Dealers have temporary exemptions to be nakedly short, which also is not usually a problem before a correlation event like GameStop happens. This is what happened with GameStop. All that call buying by retail created an aforementioned gamma squeeze, and the layering became a mess. It was resolved by panic buying. Professional fund managers and short sellers were caught out in this way. No shorts had to be naked for this to happen. And I'm sure there were some, but naked short selling was not a prime factor. Kind of sounds like me. Thinking. GameStop sold over $1 billion stock at 225. Absolutely a smart move. But man, I just thought retail was going to be shredded on this meme thing. Yeah, I know you did. See, you didn't believe in it like any of us. You really don't know. You don't know, Michael. I was early, but much less than I usually am. AMC collapsed. From there, others peaked a month later or two, but by 2023 they had all fallen, and I thought the meme trade was dead. I hope some listened. In any event, here is GameStop in 2025 with the market cap near $10 billion on the surface. Given my history with GameStop, that number is stunning. Not only relative to what I was paying for the stock exactly, and what the company was worth just a few years ago. If I held GameStop this entire time, my investment in GameStop would be worth $250 million, roughly the same amount as my Avanti investment would have become over 25 years in the hands of very good, I don't even know that word, but I'm going to say it, in the semiconductor industry. Got you. GameStop has been run for some time now by Ryan Cohen. His tenure has not been perfect, yet the company has recently produced significant free cash flow, has a ton of cash on the balance sheet. Yes, they do. They have some convertible debt, more converts come, but yeah, don't care, crypto, whatever. As a melting ice cube in a capital structure with some optionality, GameStop is roughly as I approached it in 2018, except it only has 16% short, and all the numbers are 10 times bigger, and Ryan is running it, for better or worse. Those who know me, as well as those who have read my posts so far here on Cassandra Unchained, know that I believe history often lends a valuable perspective to analysis. This post clearly, along those lines, it is a foundations post. These posts cover subjects that would feel at home in a book if I were to write one. These are meant to provide both a foundation and a reference for future ideal posts, which are analysts of current opportunities. This whole saga was a valuable lesson to me, and I hope for some of you. The second and final post about GameStop miniseries will be an idea post, my breakdown of GameStop as an investment today. Until next time. Okay. That was a lot, dude. Like 500 pages or whatever the hell it is. That's why it took you so long to put that out. I'm not the best reader out loud. Let's just put that out there. I read very fast to myself, and my words, I can't spit them out as fast because my mind goes too fast. Maybe you know how I am. I'm really that way in my brain. My brain tries to say things faster than what I can say them. That's always been since I was young, but I don't care. I mean, I'm not a perfect guy. But back to Michael Burry, because I don't shy away from anything that I deal with. One thing I've learned about people that go against the grain, when they publish it like this and they put their name and their whole reputation on the line, they've done some real due diligence here. And I know people have a different path to it, but I always pay attention to what I call connect the dots. You know, this is a series of mine that I put together via YouTube. There's also a book that's being written at the moment. That's the first copy, but the real copy's coming out. I say the real copy, second edition, with just prime examples of what the unseen parts of Wall Street that people are not looking at. You can look at charts, you can look at short squeezes, you can look at market caps and values and metrics and measurables. Everything, you can look at all of that. I wouldn't care. It's who's managing your money. Once you find out who's in charge of your company and you ask yourself, why is this happening? Why is GameStop targeted? Why is it being run through the mud? I mean, I've been reading the same headline for the last, 24 hours, and it says the government is going to reset your money. And I've seen that title and phrasing. You guys can Google it. Reset. The word reset is being pushed out by everyone right now on every platform, and I'm just like, how is it in unison all the time? I don't know if it's AI driven, the algorithm is catching certain keywords, but I realize what GameStop is. I understand what it is. You understand the value, but no one in America is allowed to talk about GameStop in a positive light on any platform. Dr. Michael Burry, who just posted this like an hour ago, if that, is the only guy to come out and say his next two posts are going to be about investing into GameStop and what's to come. That should tell you something. For you guys who rode this out the whole time, well, you guys are going to be up. You guys are going to be great because this is the bottom. We are in 2018 right now. 2018, when you were buying it for cash. Now, whatever the cash on hand is, that's your market cap. Boom, the earnings themselves, a P ratio of 1 on top of your cash. This value is undervalued. It's big effing value. It's deep value. But because GameStop, the company, has improved and improved and improved, and Ryan Cohen has changed it all around for you, now we're at a different threshold. We're at a different plateau. So if we're taking off from this echelon now, well, $10 billion is the ground, where's the ceiling? Because I saw GameStop go from a company of $100 million, $200 million, $300 million, $400 million market cap, all the way to 40 billion, 35 billion. And you catch that math. Okay, it was a 100x run, and it's going to happen again. And if it goes from here, you're looking at $1 trillion. If it goes from here, we can get to 100 billion, then 500 billion. You're going to find out just how valuable this stock is and this company, because $10 billion today in this economy, in this world, is a lot more than people think, because it's not about leveraged. It's not leveraged dollars. No. There's 5 billion of it that's just theirs, and another 4 to 5 billion that they're raising off of 0% interest on some convertible notes. And I said it today in my stream, and I'm going to tell it to you again. Do you want to own 100% of a grape, or do you want 90% of a watermelon? What do you want to own? Because that's GameStop, and it's going to be on steroids real soon. I'll see you around, millionaires. Dr. Michael Burry. Say some more great things about GameStop, but that's the bulk of it. That's the gist of it. Do your thing. Good night, millionaires. Peace.